Guys, welcome to another Founder Wisdom podcast. Today with us, we have Eric Gall. He is founder, business broker, and M&A advisor at Edison Business Advisors. Last time we spoke, he had quite sad and exciting and weird stories to share about like past clients. So like today we'll focus on some of these very successful stories of people selling and or buying new businesses. So really exciting guy to speak generally, and Eric has the story, so be ready. Eric, short introduction about yourself and tell us a bit more about Edison.
Yeah, well, I got started in the business kind of haphazardly. I was working at Ford Motor Company, and I was doing post-merger integration work for Jaguar, Land Rover, Volvo, Ford, and Mazda. So as I was integrating those in the business office at Ford, I got involved in a few projects. Those projects included a joint venture that we did with Halo Corporation that we eventually rolled up into a company called with Beanstalk, which was in the licensing arena. But also at that time, they passed some stuff on to me, put it on my desk and said, hey, can you help, offload some of these small businesses we bought, prior to the internet bubble that had some technology involved with them where they thought that this technology may have use, in dealerships or other areas of the business that Ford operated in. So, I had to learn how to sell off a business, kind of at a quick pace when these projects kind of came to me. So I sat down with private equity groups and learned how to package a deal. And that was a very, very interesting experience to me. But as we sold some of those businesses, it got me interested in maybe acquiring businesses. So for several years, I spoke to several of my colleagues at Ford, and we talked about putting, some money, pooling some money together and purchasing some businesses. So we created our little private equity group or, private funding group to go out and purchase businesses. We had seven successful acquisitions in the automotive service sector, transportation sector, as well as software. And also really interesting was a franchise for a last mile delivery service, probably about 5 or 6 years before FedEx launched theirs. So we were way ahead of the game. But that was before the Great Recession. So some things happened in the Great Recession where, my partners started exiting the business and going back into corporate America with jobs. I chose to stay on the entrepreneurial path and kind of closed up shop, sold off businesses one by one. And as I was selling off our holdings, I had the bug to do it for other people. So that's how I got started back in about 2009 and, hung out a shingle. Basically connected myself with a gentleman up in Orlando who was one of the fathers of business brokerage in the state of Florida, and haven't looked back. We started Edison Business Advisors in late 2014 with the idea of going more upscale from Main Street, which what I was doing with Florida Business Exchange at the time. But my vision for Edison Business Advisors was to get more involved in lower middle market deals, in addition to those Main Street deals.
I'm going to start with a big question. So
Sure.
Hope you're ready for it. You went through 4 types of economic crisis, if you want. So first, the dot-com boom. Mm-hmm. Second, the 2008 crisis, then the COVID. And finally, the one that we're in right now. What similitudes, what differences do you see in them? And how do these affect buying and selling businesses?
Well, the great thing that I've seen about, this industry is there's always businesses for sale. You always have, business owners getting to kind of the end of their careers and, wanting to exit. And you've got a baby boomer generation out there where I'm at the very tail end. But that generation, there's still a significant number of those baby boomers who own businesses and are preparing or, on the verge of exit. So I would say for the next 5 or 10 years, that's going to continue. We're still going to see that steady stream of businesses coming to market. What's changed in economic times are how you get deals done. So in tighter times, obviously when money is tight, interest rates are higher, things change a little bit from the perspective of how you would structure a deal. We had in 2018, 19, 20, kind of the perfect wave of what I would call low interest rates. So money was cheap and abundance of wealth. So people had done real well in the market. So there was no shortage of money to be had. And what we saw was businesses trading very fast. And we saw businesses trading at higher multiples than what we'd normally seen in the past. So it was great times. I mean, I sold a ton of businesses, made, a lot of,
A lot of
very
those.
respectable commissions, for selling those businesses. And it was, something that you knew was never going to last. So where are we at today? We're at a point where we will have to be a little bit more creative. With money being more expensive, the stock markets being, a little bit down and stagnant, there's not that abundance of money and cheap money available to do deals. However, there's a couple of announcements that just came out, one yesterday, in fact, that, are very encouraging. And the other thing I want to talk about too is the fact that now you don't need a FINRA license to do a stock sale or a partial transaction of a business where you sell a portion to an investor. That, as of March 29th, the U.S. government in Congress kindly passed and signed a legislation that allows people who are not FINRA licensed to sell privately held businesses or the stock of privately held businesses, either in their entirety or in part, which helps us, transact things like C corps, which were very tough to transact in the past because sellers, due to double taxation, want to sell the stock of the business. Well, if I can't advertise the stock sale, it makes it more difficult to sell. The other thing is selling a portion of the business through a stock transaction now is available. So if someone is looking for either what we call a partial recapitalization, where someone comes in, buys part of the company, I can advertise that that's what they want now, where in the past I couldn't. I could only advertise that it's a sale of the assets from one owner to another. What was announced yesterday is great news, and that's from the Small Business Administration, and that's that their loan programs will now allow you to sell a portion of the company. So now the seller can retain some level of ownership. So this is great news from a funding standpoint with SBA loans. The whole detail has not been worked out yet, but from the sounds of it, if you have a key employee, or if you have a family member in your business that you want to take over, you'll be able to fund their acquisition in its entirety or in part by an SBA loan. So we can handle stock transactions, internal sale to employees or family members.
That's
which is
huge.
It's going to change the game significantly.
Yeah, huge announcement. Yet I want to keep it somewhat simpler for my audience. Yet we're going to talk about innovation in the field. But first, I want to ask you a time in your life at which you remembered that either first you weren't free to work on your own schedule, for example, when you were at Ford, or a time of your life in which you were broke. And I want you to reflect and tell the audience when was that moment and how did it feel when you could have control of your own schedule, and second, when you were financially free? Because a lot of people they still ponder over those two things: one, freedom, and second, time freedom, and second, financial freedom. So how did first entrepreneurship change your life with giving you more time and freedom? And second, tell us the feeling of that first big check that you held in your hands and you said, okay, yeah, now my life will change. I won't have to stress as much, or I will have more financial freedom from now on.
Well, probably goes back to the first, substantial deal I did. And, you look back in like 2010 and, the size of that deal and the amount of money I made, it's not huge. But, when you do a transaction and you make, say, $75,000 commission and that hits your bank account and you were looking, at Ford Motor Company and, I made, probably twice that amount, but one transaction, I made 6 months salary at Ford. It kind of gives you the feeling that, yeah, I can make it doing this, for other people, and kind of gets you excited and motivated. And of course, I cashed that check and I immediately put some of it into marketing. It was a sale of a waterfront restaurant. So I put, quite a bit of money into marketing to waterfront restaurants. And I actually had 4 or 5 really good waterfront restaurants for sale, and the oil spill hit.
Nice. Is that one of your specific niche? Because I want to talk about niche. I'm quite obsessed with what product is right for what market. I'm a product market fit guy. I have my little virtual lab and constantly making tests. So what type of businesses are you selling nowadays? What trends are you seeing? What's hot and what's not?
Well, I mean, restaurants are always good sellers. I do restaurants, but I like the larger ones, more of the waterfront and of that nature. But my real passion, right now is I love to do dental practices. I love to do healthcare type businesses. And then my manufacturing background, machine shops, metal benders, any type of manufacturing distribution business, I really enjoy as well. But I'm located in Southwest Florida, so it's a service economy down here. So there's also, I also do quite a few businesses that are more of the service related types. In addition to restaurants, that would include things like lawn and landscaping businesses, pool routes, things of that nature. I will definitely, take those type of listings. So I'm more of a generalist in nature. But, there are specific niches that I have developed, knowledge and expertise in over the years that I really like. And those would be medical, dental, and, anything manufacturing related.
Yeah, it's the typical product founder market fit mentality. So what's your experience? Where's the market at? And what does the market need? Another way of viewing it is kind of ikigai model. What does the market need? What am I good at? What can I get paid at? And what is the market willing to pay for? So yeah, that kind of dictates the flow here. As per the niches you mentioned, why is dental hot? Is it because like people pay quite a lot for dental practices? Is there because there's a lot of dentists nowadays? Is it because people are getting more and more conscious of their smiles? Like, why do you think you're going more after this niche rather than the others?
Well, in dental, what you've got is the education process has become so expensive for a dentist. When they're leaving dental school, they're leaving with hundreds of thousands of dollars of debt. And, the dentists of my generation and older, who are looking at selling right now, when they left dental school, they didn't have anywhere near, the volume of debt. And, so they were able to pay it down quickly. And once they paid it down quickly, they could purchase their own practice. That lack of, that lack of free capital for the young dentists to go out and purchase their own dental practice, what it's done is it's created what are called dealer service organizations, or DSOs. And the DSOs are going out and they are, accumulating practices. So, and they have private equity behind them, family office money behind them, So with that money, they're able to pay a premium for those practices. And I don't want to say they pushed out the single or solo practitioner, but they are in the process of pushing out a lot of the solo practitioners.
Okay, so somewhat complex to decorticate here, but Okay, so let's say that there's a dental practice. The dentist, he's been owning that for like 50 years. He wants to retire, right? He goes to you, okay, bring me a buyer. That buyer would be like either an institution or a family trust fund or whatever, and they buy that practice at a premium, and that's how you make your money. That and then what do they do? That fund, do they go find younger dentists or dentists with at least like 5 to 10 years experience? What's the process? How do they rebuild the practice and make it profitable?
Well, the reality is that, I don't sell every dental practice to a DSO. If the dentist wants to sell to a solo practitioner, I'll do it. But in the DSO model, we'll go back to that. What they do is they basically will want the seller to stay on, the dentist to stay on for a certain period of time. I'm not seeing that anywhere from a year, up to 3 or 4 years. And they want that for a transition period so they can bring in, younger dentists, get them trained to replace, the founder who's exiting.
Got it. So let's say that the older, more experienced dentist stays for a year or two. Is there like, do they recruit from straight out of school another dentist and they train them for 2 years and then they let them free reins? Is that how that works? Because 1 or 2 years seems kind of short.
Well, in general, most of the dentists I speak to, they prefer to have someone who's been working for another dentist for a period of time,
Got
come
it.
in. Just from the standpoint that they're not starting from, square one and training.
Got it.
But, every DSO is different. Each one has a different model. Each one has a different pay scale. So depending on who you're working with, they're going to have their own unique strategy.
Got it. Do they give shares to the practitioner? If so, how much typically? And what is the salary that they give out to dentists? Is it like 200K a year? Like what do the numbers look like?
Well, typically the way they pay dentists is like a percentage of production or collections.
How
So
much
based
percent?
on, yeah, so generally those numbers can range from 25 to 35%, with an
Oh,
average
it's
being right
big.
around 30. So a dentist, if he pulls in, say, $1 million, that dentist will make 300,000. If
That's
that
pretty good.
dentist pulls in less, he'll make less. If he pulls in more, he'll make more.
But which is kind of weird, right? Because they're not really in charge of sales and marketing. That practitioner, usually they're really bad at that. They're mostly good at playing in mouths. So it's weird compensation model. So it's like zero share, just like pure revenue, right?
Yeah, it's just basically a revenue share. Yep.
Okay, which is still somewhat interesting. Then my next question is like that fund, like how much percent will they make? Because let's say that they pay 35%. Let's say that the expenses are good, like 50-ish%. There's only 15% remaining, which seems kind of small. Well, that means 150K per year per practice place. And yeah, obviously these can be like bigger, but is that their margins there? Like they make like 15%?
Well, I mean, every practice is run different. So, what they bring to the table is when they buy one of these businesses. Let's take for an example, let's just say it's a $6 million annual revenue practice that was putting $1 million to the bottom line. So $1 million EBITDA. They'll come in and they'll take a look at that practice and they'll do their evaluation. Now, remember, as a dental service organization, they may have 20 other units. They may have 1,800 other units, nationwide. So their buying volume and buying power is significant when it comes to dental materials and dental lab contracts. So they can go and immediately apply, significant savings oftentimes, to the costs a dentist incurs. They also, centralize things like HR. They centralize, the IT systems. So there are significant efficiencies that they can put in place when they buy one of these private practices to increase their bottom line and get the return they need to make it make sense.
Right. And that's really attractive from a financial standpoint. I guess when you're a PE kind of business, that's how you make your money, is that, and especially if you go in niches where people are not business savvy, and there's a lot of niches where people are not business savvy. Um, well, you just come in with your knowledge, your intellect, you let them do the physical work. And another niche you mentioned is like gardening companies or pool companies or outside service companies. And yeah, these folks are typically not super business savvy. It's a bit sad to say, right? But they're like under the sun, and they're grinding, they're grunting kind of, most of them, right? Doesn't mean all of them, but that's where you come in as, like the brains. You optimize, you organize everything, and I think you can make a fortune with that. My next question is, and we discussed that like last time, you and I. So you've been in private equity. Now you're a business broker. Isn't it better to be in private equity and just make like a fortune at scale and have recurring revenues kind of and humongous cash flow, or is it still very much time consuming via being a business broker?
I guess it just depends what you're comfortable with and what you like. When we own those companies, I had over 75 employees, and you're going through a recession. I'm not paying myself, and, the employees are knocking on your door asking for raises.
Yeah, like
It just
worst
got to,
freaking time.
it just got to the point where I needed to do something I enjoyed, and I didn't necessarily have to rely on other people. So, this was kind of a natural fit where, it's all on me. I can make, what I make based on my efforts without, and there's no limit to that. And I can work as hard as I want, or I can work, I can kick back a little bit if I want, and I can set my own schedule. So that's, been helpful.
Yeah.
So if I want to take, 3 or 4 days and only check email and not really do any meetings or anything of that nature, I can go do that. If I want to, bury myself and get, a ton of meetings done, on Monday, Tuesday, Wednesday, the following week, after taking some time off, I can work, 16-hour days those days, just to kind of catch up. So it's, it's I've put myself, I think, in a situation where, the fruits of my labor, have borne, or paid great dividends.
Yeah.
Without having to rely on, a ton of other people to get there.
Yeah, let's just summarize it with like you live a good life and you're happy because also, well, I understand the 2008 somewhat kind of trauma. I mean, I've gone through various periods as well. I've managed businesses of 100 employees and so forth, and got the stress of people, asking me for money while they didn't bring a buck back to me, and it's kind of 9 to 5 mentality and humans and how they are. They're very emotional and so forth. Gone through a couple of crisis times like COVID, where I have to completely pivot my business and so forth. I think, there's like really this stress aspect, which is important, right? Because what if you make crap loads of money, but you're still very stressed at the end of the day? You're not a good human being to your wife, to your family, and you're just not happy, right? Like I think most people should optimize for happiness. Yesterday, I wrote on my Twitter, if you want to know how healthy you are, ask yourself how happy you are. Because odds are that if you're happy biochemically, you will be healthy as well. Just quick equation for that. But maybe, who knows? Maybe you still have a conquer the world project to go back in private equity. Who knows? But how big is the business right now? Do you still have employees, and are they like full commission, or are they like paid a salary?
Yeah, I have 5 what I'll call associates, 2 senior and 3 junior associates, and I have 1 office staff.
Okay. My last question to you, Eric, because I know we're kind of out of time, but Well, still see humongous opportunities from private equity, and I know the employee pain, but there's a nice solution to that, which is called ChatGPT and uh, artificial general intelligence, which we've seen lately. So my dream would be to acquire these business with capital leverage, right? So either borrowed from many investors and so forth, and just let my processes do their things. Obviously, there would be a bunch of commission-based humans, right? Not paid an hourly salary. So that would be like win-win. I think more and more humans are willing to accept that and pivoting towards this model because everyone's losing their job because of GPT and so forth. So my dream would be that, but and I mean it's not a dream. I will do it for sure. But the other aspect of it, which is will lead to my next question for you, which is for business brokering type of business. What innovation do you see in your sector? Like how can we scale business brokering? We've seen platforms online. Have people started to use Chat GPT? Could you make some more innovative deal with them? Like, okay, you sell and then I get a part of the cash flow or whatever. Like, what innovation have you seen in business brokering, and what do you have on your own roadmap?
Well, I mean, the innovation that I've seen is there's been some platforms that have come out that have, help connect buyers and sellers. But each one of those platforms, cater to the brokerage community. I think the broker has a place no matter what innovation comes into place, primarily because the business owner doesn't have the time or the emotional, I would call it strength. Yeah, to kind of get through a deal. It's, getting a deal done is tough, and having an intermediary in between you and the buyer and seller, helps diffuse emotion. It helps keep the process on track. It allows the seller to keep focused on their business, which, they need to transfer a business that's performing as well as what they presented, to that buyer. So, if a seller tries to get involved too much into the sales process, it takes away from their time running the business. If a buyer, tries, to do all the sourcing on their own, I mean, and contact, I mean, that's a lot of work. Having gone through it, having, bought, those 7 businesses myself, it's a lot of work. We relied on brokers to tell us, hey, can you do a search for us? We're looking for automotive service centers, or we're looking for, businesses that, are of this nature that, produce this much, owner benefit or EBITDA. And they were a great help. So, I've been on the buy side, I've been on the sell side. And that's where I saw the value of a good business broker. I also saw a lot of folks in the industry who were mediocre at it. So I thought, hey, based on my knowledge, my experience, my background, I can take this up a notch, and provide a better service, to buyers and sellers, and that's been, the mission from day one since I've gotten involved.
Yeah, the value is just humongous. And I haven't gone through the process myself, but yeah, maybe I'll understand more while at it. You've told me some horror stories. You've told me some major victories, some celebration stories. How do you keep your cool through the transaction? How do you calm your clients, and how do you not absorb all of their stress?
Well, you got to keep, kind of the end in mind, right? And that's getting a deal done. And that's my job. My job isn't necessarily to be the seller's best friend or the buyer's best friend. And sometimes, I have to be very blunt with them. From everything from, I've even gotten into, we talked about the one Greek seller who I got into a shouting match with, but he loved getting into a shouting match. I just read him right, got him, back and forth. And, by the time we were done, we got him back in line and back, focused on getting the deal done. So you just need to read your parties, read them correctly. There's a lot of psychology involved in getting a deal done. And sometimes you gotta kind of what you call it, like feign outrage or feign, happiness when, you have, you're actually pretty calm about the whole situation, or you feel like things are slipping. So you always just got to keep people on track, and you got to
Yeah.
use whatever tools you can derive to get there.
Yeah, kind of Chris Voss book, the FBI guy on negotiation, would be a somewhat good recommendation for what you just mentioned. But thank you so much, Eric, for the interview today. Where can people find out more about you and Edison?
Well, obviously they can go to our website. It's www.edison, Edison, like Thomas, B is in boy, A is in apple.com. So edisonba.com. And obviously they can email me at eric@edisonba.com or info@edisonba.com, or they can call me at 239-738-6227. That's my cell phone. It follows me everywhere I go. I can't get rid of it.
Sure, and Eric J. Gal on LinkedIn.